Alright, so I'm spotting a potential bounce short setup on Euro New Zealand dollar. This is the 50-minute candles. So let me just pull up my drawing tool. Give me a sec. Okay, so I'm spotting a potential short setup, bounce short setup on Euro New Zealand dollar, 50-minute candles. You can see it's been testing the 50 moving average, and right now it's right there at the 50 moving average. All right, in fact, hit the 50 moving average. It looks like it's coming down, and I should actually have sold it when it was there, but I was doing something else. I was busy with my kids, so happened. So now that I've seen it, it's really kind of like coming down. So I could buy it anywhere around this area. That'll be fine. Okay. So this is a recent swing high. It's lower than the previous swing high. Okay. And the recent swing low is lower than the previous swing low. So it meets all the necessary criteria. And we're going to check the H1 candles, hourly candles. Well, before that, notice that on the 50-minute candles, it's on a clear downtrend, right, where the 18 is below the 50, below the 200 moving average you see over there. If I click on the hourly candles, you can see it's also on a very clear downtrend, 18 below 50, below 200. So H1 is aligned with 50-minute candles, okay? So I'm probably going to put a sell order right at the 50 moving average. You can see it's moving up slightly again, so I can have a chance to get in at a slightly higher price, which is what I want. So I could sell at, say, 663, 66, well, hoping to set 6636. Okay, and my profit target has to be before this swing low. So my profit target can be somewhere here, roughly, right? Don't be too greedy to put it there. And so how many pips can I get? I can capture from here to here about 35 pips. So I can put my I can afford to put my stop loss 15 pips above this moving average, because if I'm risking 15 pips, I can make 35 pips. It's still more than 1:2. It's still a pretty good deal. Okay, so let me do my math. 6636 plus 15. Let me just work it out. All right, 6636 plus 15. Stop loss should be at 6651. Okay, roughly at 6651. There we go. And you can see it's coming down, which is not too good for me, because I wanted to have sold it there, and well, hopefully it's going to go up again and fill my order. All right. Okay, so no worries. Again, my stop loss distance is about 15 pips away. This is the Euro New Zealand dollar. So you just have to do your position sizing appropriately. So I'm going to trade 0.98 lots on this one. Okay, so I'm going to click new order. 0.98 lots. Again, hoping it's going to come up and fill my order. I'm going to do a pending order, sell limit. I'm going to sell it at 6636. 1.6636. Stop loss 6651. I'm just going to place the order first, and then I'll place my profit target. There we go. Okay. So I've got an order to sell at the green line. Right now the price is here. Again, I should have sold it when I was there, but I was doing something else. It happens in trading. By the time you look at it, it's already gone down, right? I should have sold it there. So when that happens, no worries, we put a sell limit order there, hoping the price would go back a bit and fill my order at that level, because I don't want to sell it here. I don't want to chase it down, because if I sell it there, I'm not getting a good price, right? So my stop loss is there, 15 pips away, and my profit target can be 30 pips below my entry price. Looks like it's coming down. I may not get filled. Let's hope I may get filled. Okay. So my profit target will be 30 pips below my entry price, which is 1.66 1.6606. There we go. Right, so my entry price is over there, stop loss over there, profit targets over here. You can see that if I had gone in when I should have over there, I'll already now be in a profitable trade, waiting for the profit target to be hit. But again, sometimes you miss a trade because you're busy. By the time you look at it, it's already gone down. But if it has not hit your profit target yet, you can still place a sell limit order, hoping it will go back up temporarily to fill your order before going and hit the profit target. Because remember that in Forex, nothing moves in a straight line, right? It doesn't always go down immediately. It could go down, go up, it could fluctuate. So I'm hoping it's going to fluctuate slightly up to fill my order before going down. Well, let's see what happens. It may not get filled. If it hits the profit target without me getting filled, that means I've missed this trade. I'll cancel the order. I'll look for the next order. All right. So this happens in trading, to tell you that sometimes you may get in late, but if I had seen it gone up, all right, I could have placed a sell limit order there to catch it going down. All right. So let's see what happens to this trade. All right, so I'm still waiting for the price to go up. Oh, okay, you can see that it's now going to hit the profit target soon. Now, let me take this opportunity to teach some lessons here. And one of the lessons is, some traders may say, Adam, if I'm so convinced it's going to go down, why don't I just sell it right away, right? And one of the things I've learned is, don't ever chase the Forex price, right? So if it has already moved down, don't chase it, don't chase it, right? At the same time, if you're going long and it's already gone up without you, don't chase it. Let it come down to your intended price. If it doesn't, fair enough, walk away, find another trade. Don't be afraid of missing out on this trade. If you can't get your price, don't go in, right? So even if we don't get this filled, I like to take this opportunity to teach you this lesson, okay? That if I miss this trade, it turned out to be a winning trade, I missed it, that's fine. That's part of trading, no regrets, okay? You can't always be there at the exact time, unless you are watching the market 24 hours a day, 7 days a week, and you gotta have a life sometimes, right? So at times you'll miss a trade, at times you'll get a trade. So it's okay, While I'm looking at it, let me just check on the Fibonacci. I'm going to click Fibonacci ratios. So notice that this is an impulse wave, so it's impulse wave going down. So if you were to draw a Fibonacci, let's check it out. This would be A, that would be B, right? This B, and is this a Fibonacci level? Because I was rushing, I didn't check. But if I, had the time, I would check, right? So let's check it out. A to B. With that. And okay, you can see it's not really at the Fibonacci level, right? Because the Fib level was here. Okay, well, it is in a way. So it kind of like hit this Fibonacci 61.8% level, right? And found resistance, and it looks like it's coming down from there. Okay, so it is near a Fibonacci level, not exact, but it's near there. Okay, so it's a pretty good retracement. Okay, so again, I'm still waiting for the order to be filled. I'm going to come back in a while. I'm going to do something, and let's see if it gets filled. If not, again, we've learned an important lesson from this trade. If you've missed the trade, place a sell limit order. If it doesn't get filled, hits the profit target, cancel the order. Don't chase the trade. Move on to the next trade. All right, so checking in on our trade, and some good news. As you can see, the price actually went back up as we anticipated, and it triggered our sell order. All right, so let's take a look at the order. View, terminal. All right, so as you can see, we sold Euro New Zealand at 1.6636. That was our entry price. Our stop loss is there, target price is there, and right now our current profit is there. Okay, so as it goes down to our profit target, we'll hit our maximum profit. If it goes to hit our stop loss, we'll of course have a negative return. But it looks like it's going to hit our profit target soon. We are halfway there. Looks like a high chance another winning trade for the bounce setup. So again, lesson learned is when you saw it coming down just now, you may have thought, okay, the game's over, I was too late, forget this trade. You know what? You never know. You can still place your sell order up there, and in Forex, it always tends to be a bit volatile, so it doesn't go down in a straight line. It may go up again to fill you at a better price before going down, hitting the profit target. And again, the lesson is, if it's gone down, don't chase it, because imagine if you had sold there and it went up there, you'd say, you know what, I got in a bad price. Okay, so similarly, if you're going long and the price has already moved up, don't chase it. Place a buy limit order, let it come down to buy at a lower price before going higher, right? So you got to have faith in a strategy that it will work, not all the time, but over time it will indeed produce the results that you want. So this Euro New Zealand franc short bounce trade. Okay, so happy to report that it has hit my profit target, as you can see. So once it's hit the profit target, you can see all the lines are gone. I'm going to go to View, Terminal, and as you can see, let me go to my account history. So there we go. We have exited with a maximum profit of $213. It hit our target price, so it's in green over there. Okay, and you can see, by the way, these are the recent trades I've done for this particular month. It's the 10th of January, so I've had 10 days of trading in January, and you can see not all trades are winning trades, right? This was a winning trade, losing trade, well, this was a break even, winning trade, right? Winning trade, losing trade, winning trade, losing, okay, winning trade, right? So overall, I'm up $876, okay, and this is a small account which I'm using to show people that you don't have to start with $1 million or $500,000, but I just started this account. Let me just show you. Right now the equity is about $6,000, and I started in January with about $5,200, right? So from 5,200 to 6,200, well, sorry, I was at 5,003, yeah, from 5,300 to 6,200 in just 10 days, all right, in just 10 days of January. $800 profit. And if you think about it, $800 profit, let me just do the math right now. $800 profit out of an initial 5,003, that's about 15% return in just 10 days of the month. Okay, in fact, New Year's was holiday, plus we had weekends, so effective trading days was just about 7 trading days, right? And you can do 15% in 7 days, and you keep it up, you could do about 20-30% return in a month, right? And again, not every month would you get 30%. Some months you can get 50% return, some months maybe 5% return, but my goal is always to end every month positive, right? And that generates good income as a professional trader. All right. Okay, so that concludes Euro New Zealand short bounce setup.
Right, hi guys. So in this final lesson, I'll be discussing how I trade the EMA Bounce strategy on a higher time frame, which is the hourly time frame H1, and how I confirm with H4. Now, generally, the way I trade it on H1 is pretty much similar to M15. The only difference is that I'm a bit less strict in certain aspects and a bit of modification. So let me talk about it right now. So again, I'm going to be talking about trading the bounce strategy on H1. And again, you should take about 10 to 15 good trades a month, right? Win rate 50 to 60%. In fact, I would say that for H1, my win rate is pretty much higher than N15. At certain months, even going up to 70 to 80% win rate. For H1, I tend to risk 1 hour to make 1.5 R instead of 2 R. Not that you can't aim for 2 R, you can aim for 2 R. It's just that on the H1 time frame, usually the stop loss distance is relatively longer or bigger, like 20 or 30 pips. So to reach 2R is going to take quite a while. Normally it may take over 1 day to reach 2R. So you have to hold it overnight. So usually I like to exit by the end of the day. So I rather get 1.5 R and get out and re-enter a new trade the next day. Okay, so this works on all forex pairs. For the purpose of focus, I tend to focus it more on the 8 major US dollar pairs, which again is pound dollar, euro dollar, dollar yen, dollar franc, dollar CAD, New Zealand dollar, and Australian dollar. Okay, so a few key points in trading with H1 time frame. Okay, now recall that on the 50-minute time frame, we only trade the bounce when it bounces off the 50 moving average. Okay, but when I trade on a H1 time frame, I will take it if it bounces off either the 50 moving average or the 18 EMA. So either one is fine. But important thing is that the EMA must recently be tested before to be a reliable support or resistance. Very important. Okay. Next, on H1 time frame, my minimum stop loss distance is at least minimum 20 pips to about 30 pips. So you may say, so do I use 20 or 30? Or 25, right? I'll show you later on how I decide where to put my stop loss. But again, at least 20 pips. But for certain pairs like pound and euro, normally I go up to 30 pips stop loss. Yeah, like I said, I tend to aim for 1.5 R, which means if my stop loss is 20 pips, I aim for TP of 30 pips, right? If my stop loss is 30 pips, I aim for a profit target of 45 pips. So 1 is to 1.5. There are times my stop loss may even be 25 pips. So you just take 25 times 1.5, that's your take profit distance. Now, whenever you trade on a higher time frame, there are a few advantages about it. Well, number one is that you don't have to move so fast because it takes 1 hour for the candle to close. You can kind of like take your time. Whereas 50 minutes is you have to move a bit faster. That's one thing good. Also, because your stop loss is further away, like 20 or 30 pips, the spread has less of an impact on your trade. Because again, when your stop loss is 8 pips away, a 1 pip spread makes a difference because 1 out of 8 makes a difference. But again, if your stop loss is 20 or 30 pips, 1 pip doesn't make much of a difference. So that's the other advantage of trading on a higher time frame. Of course, the only disadvantage of a higher time frame is that it takes longer to reach your profit target, right? So a bit more patient and a bit less frequency. So there are pros and cons to both. Yeah. Next thing, when we trade on H1 time frame, again we always look at the higher time frame, which is H4, to be aligned. So again, if H1 is on an uptrend, we're going long, H4 must also be on an uptrend. Vice versa. If you're going short, H1 is a downtrend, H4 must also be a downtrend. Next, very important is I want to ensure that on the higher time frame, which is H4, the stop loss I place is also below a strong support, which has been tested for going long, and above a strong resistance when I'm going short. So again, let me explain further right now. All right, so let's take a look at a few past trades as case studies. And the first one is pound dollar. And again, we are trading on the H1 time frame. Now, first question people ask is, how do you identify these trades? How do you find them every single day? Well, one way is to just look at the charts every 4 hours or so. Because remember that these are hourly candles. They take 1 hour to form one candle, right? So normally if you look at a chart, you can tell if a trade is setting up soon. If it is, like, you can see that it's going to bounce at the 50 soon, then check 1 hour later, right? Because again, it takes 1 hour to form the candle. But if you look at a chart and say, hey, it's very far from the moving average, then you don't look at it till maybe like 5 or 6 hours later, right? So that's one way, and that's what I do. So normally for myself, I screen through the 8 major pairs every 4 hours or so, which is again the 8 major dollar pairs, right? Pound dollar, euro dollar, New Zealand dollar, dollar yen, dollar franc, dollar CAD, Aussie dollar, and New Zealand dollar. But of course, the best way is to be on the Telegram chat group. So in the chat group, every time someone sees a potential trade, they'll call up in a chat group. And the great thing is we've got over close to 400 traders that are watching the markets every hour. So someone will see something, they'll call it out. In fact, I can tell you that most of the trades that I take nowadays is because it was called out on the chat group, right? Okay, so anyway, so let's imagine someone calls out on the chat group, hey, pound dollar is a potential bounce on H1. So normally when they call out the trade, you'll probably be at this point of time when the price is like, coming near and going to bounce off one of the moving averages. So again, either bouncing off the 18 or the 50 EMA. So in this case, you can see that, okay, it's coming near the 50, right? And you're wondering, okay, can I buy as it bounces off the 50, correct? So the first thing we want to look at is the 50 strong? Is the 50 EMA strong? So how do we know? Well, we check, okay? Recently, was it tested before? And if you look back recently, you can see, it was tested, in fact, many times before. So I'm confident that the 50 will hold. Now, it doesn't have to test many times. As long as it tested at least once recently, that's good enough for me. So I'll consider this a test, all right? So as it's coming down, I say, okay, it's going to hold because it's been tested before. So what do? So I will get ready to buy once it hits the 50 moving average. Now, there are two ways to enter it. The more aggressive way and the more cautious way, okay? The more aggressive way is, as the price is coming down, you place your buy order right at the 50 moving average. It's a buy limit order. So in this case, the buy limit order is at 3081. So remember, a buy limit order means the moment the price reaches 3081 or lower, it will fill your order. If it never reaches there, then you don't get filled, okay? So this is a more aggressive way. Why? Because sometimes the price may drop and hit your order and you buy and it goes all the way down and you go, oh shit, hits your stop loss immediately, right? It can happen, right? So if you're a bit more cautious, what you could do is don't place an order yet, right? Wait for the price to hit the 50 moving average, pierce below it. Once it pierces below it, wait for it to come back above it, right? So what you can do is wait for the price to hit the 50, go below it, okay? And then quickly put a buy stop order at the 50 moving average. So instead of a buy limit, use a buy stop. Remember, a buy stop order means you buy only when the price goes above the current price, right? So it hits the buy stop and you're in. Now, you don't have to wait for the candle to close, right? As long as the price goes below and you put a buy order there, stop, goes up, boom, triggers your buy order. The candle doesn't have to close. So this is a bit more of a cautious way, right? Okay, so in this case, I'm a bit more aggressive. I put my buy limit order at 3081, waiting for the price to go and trigger my order, right? Now, the next question is, where do I put my stop loss? You've heard me say at least 20 pips or further, right? Now, normally, before I decide where to place my stop loss, I would think, where is my profit target first? Okay, now, when it bounces off the 50, okay, ideally, I want to hit the profit target near the recent high. Okay, so the profit target should be near the recent high or slightly above it, but not too far above, because then it's going to be really hard to reach. So what I normally do is I quickly measure, okay, from the 50 moving average, measure it to the recent high. So in this case, when I measured it, it's about 50 pips away, 50 pips away. Okay, so I would say, okay, is it 50 pips away? Yeah, it's about 50 pips away. That's right. Okay. So if it's about 50 pips away, I'll say, okay, if I want to be even more conservative, I like to take my profit even before it reaches there. Right. So in this case, 45 pips, for example. So if my target price is 45 pips, my stop loss can be 30 pips, right? Because why? 30 to 45 is 1:1.5, right? So then I'll decide my stop loss would be 30 pips below my entry price, which is somewhere there. Okay, so my stop loss would be at 3051, 30 pips away, my profit target 45 pips away. Now, some of you may be asking me, okay, Adam, could I put my stop loss 20 pips away? So if I'm putting 20 pips away and I'm targeting 45, then it's like 1:2. Well, it's not wrong. You could do that, right? But again, I tend to be a bit more conservative in this way. I'd rather put my stop loss further away so that it's not easy to be hit, all right? Further away. And if I take 1.5, all right, I'm pretty happy. So again, this depends on individual trades. Are you more aggressive? You're more aggressive, 20 pips to 45 pips, right? 1 to 2. A bit more conservative, put a stop loss further away, 30 pips and 45 pips, call it. It's really up to you, right? So I'll tell you what I do, more conservative. So I put 30 pips, I go for 45 pips, all right? Okay, so once I determine my entry, stop loss, and profit target, I normally would draw lines to show it. So there, entry, target price, stop loss. My lines are there. Now what do I do next? Next thing I'll do is I'll check H1, the higher time frame. Okay, so boom, I go to H1. And on the H1 time frame, I will see my entry price, which I drew earlier, my profit target, and my stop loss. Okay. Now I want to ensure that on the higher time frame is also on an uptrend. So do I also see a clear uptrend? Yes or no? Yes, I see the moving averages in line and in sequence, right? But again, if I go to H1, then it's a downtrend, then no, both have to be on an uptrend. So H4 must be aligned to H1. Next, I want to make sure that on the H4 time frame, my stop loss is at a safe place as well. My stop loss is below a moving average support that has been tested. So in this case, my stop loss is over here. Let me zoom in a bit. Okay, stop loss is here, right? And you can see that my stop loss is below this blue line, which is the 18 EMA on the H4, right? So my stop loss is below the 18 EMA. The 18 EMA is a support that's protecting my stop loss, that I know the price is unlikely to break the 18 EMA. Now, how would I know that? Because I want to see that the 18 EMA has been tested before as well. So you can see that over here, the 18 EMA has been a strong support. So that gives me extra confidence that it's a strong support, okay? And this is going to be a support. All right, so the price is likely going to bounce and not hit my stop loss. So in other words, I want to see that there's a support at H1 and a support at H4. Now, some people ask me, would you look at the daily candle? All right. Well, there's no harm looking at it. Sometimes you can look at it if you want to. It's not a must, but if you look at daily candle and you notice that below your entry is really a strong resistance, like a moving average, maybe don't take it as well. But again, not a must, good to have. But I don't always check it. All right, so let's take a look at what happened to the trade that we took, or I took. So as you can see, the entry was there, stop loss was there, profit target was there. And sure enough, well, not sure enough, but what happened was the price hit my entry and went down, and I said, oh shit, it's going to hit my stop loss, it's over. But you know what? It ain't over till a fat lady sings. So you never know, right? And what happened was that it missed my stop loss by a few pips, and boom, hit my profit target. All right, I was out. So again, you never know until it's over, right? And notice that if I had used a 20 pip stop loss, I would have gotten stopped out. All right, so that's the advantage of sometimes putting a stop loss a bit further away, give you a bit more room to move and hit your profit target. But again, you never know, all right? So this was a TP trade. Okay, next one is New Zealand dollar. Again, we're trading on H1 time frame, and this one is bouncing off the 18 EMA. All right, so again, this one I think was called out on the chat group. So they say, hey, the price is going to hit the moving average. Check it out, guys. All right. So at that time I saw, okay, the price was coming down and it was going to hit the 18 EMA. So is it going to bounce off the 18? Can I buy the 18 EMA? Again, check. Has it been tested before recently? So going back, I can see, hey, the 18 EMA was tested before. Right? Again, one test is good enough and I'm confident that it's going to bounce off that. So what do? Again, I put my buy order ready to be triggered once it comes down. So my buy order right at the 18 EMA at 6770. Again, you can put a buy limit order, or again, if you're a bit more cautious, what you do is wait for the price to hit the 18 EMA, go down a bit below it. The candle doesn't have to close. Once it penetrates the 18 EMA, put a buy stop order at 6770. So it will be triggered if the price goes back up, triggers your buy stop order. That's another entry, right? Okay, so I'm going to buy it over here. And again, the next question is, where do I put my stop loss? 20 pips, 30 pips, where? Again, what do? I look at the recent high, which is here. And I measure it, and I say, okay, from here to here, all right, it's about 30 pips. Okay, 30 pips from the 18 to the recent high. They're about 35 pips. So in this case, does it make sense to put my stop loss at 30 pips? No, because if I risk 30 pips to make 30 pips, then it's 1-to-1. So in this case, my stop loss has to be tighter. So I went for 20 pips, which is the minimum. So my stop loss is 20 pips below, which is 6770 minus 20, 6750. Okay, so my profit target is right at the recent high. Again, it could be a bit above that, no worries, right? But not too much high, not too high. If not, it can't reach, and it'll come all the way down again. Okay, so you can see I'm risking 20 pips to make 30 pips. So profit target at 6800. Okay, what do I do next? That's right, I check H4 for alignment. Is H4 on an uptrend as well? So go to H4, and I can see again clear uptrend on H4, moving averages aligned. Next, on H4, is my stop loss below a strong support as well? So again, I've drawn my entry price, my stop loss, and my target price over there. And I can see that on H4, my stop loss is below this red line. This red line over there. And this red line is the 6 EMA on H4. And again, am I confident that it will hold and the price will not break and hit my stop loss? A bit confident, because you can see it was tested. So it's been testing it. My stop loss is below that. And not only that, you can see my stop loss is also below the blue line, which is below the 18 EMA. So I've got a double support protecting my stop loss. All right. So took the trade. Let's see what happened. This was a beautiful trade. So you can see the moment I entered at 18, it did not go much lower. Boom, went up, hit my profit target in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 hours. So it takes a bit longer to hit, but it hits, right? So H1 takes a bit longer. That's fine. Okay, so let's now look at a short example. So this is a New Zealand dollar short setup, and again bouncing off the 50 EMA on the H1 time frame. So this was the one where, in fact, I called it on the chat group. I saw it, I was flipping through, I said, hey, the price is going up, it's going to hit the 50, we think it's going to bounce. So I called it on the chat group, and I think a lot of my students took it and did well. So as it was going up, I said, okay, it's going to hit the 50, right? Am I confident it's going to come back down? What do? I look recently, has 50 been tested before? And I can see that over here, recently it was tested here, in fact, tested many times. So it looks like a pretty strong 50. Right, now not only that, but you can see that this was a support. This was kind of like a support. All right, it broke a bit and then here. So in a way, this kind of like support became resistance. Right, support becomes resistance. So I also have got the assurance that it is a strong support and resistance besides being a 50. So that's a bonus. That's a bonus to have. All right. Okay, so in this case, again, what do? I think it's going to hit the 50 and bounce, so I've got my sell limit order ready at 6606. So again, sell limit order means if the price reaches 6606 or higher, I get filled. So again, that's a more aggressive way, because sometimes the price can hit your order and hit your stop loss immediately. So again, if you're more conservative, right, wait for the price to hit the moving average, right, and once it penetrates, put a sell stop order. Right, so sell stop order means you sell when the price goes below the price or lower. Right, you can also do that. Okay. So Sell order at 6606, whether you want to sell limit or sell stops, up to you. And where do I put my stop loss in this case? Again, do I put it at 20 pips, 25 pips, or 30 pips or more? Again, I look at the recent low as my guide, all right? So again, if I'm buying, shorting there, entering there, I want to take profit at the recent low or slightly below there, okay? So if I measure the distance from entry to there, that's about 30 pips. Okay, so my take profit is about 30 pips or so, or maybe 30, 40 pips. So which means my stop loss has to be 20 pips. Because if my stop loss is 30 pips, to make 30 pips, not worth it. So my stop loss has to be 20 pips, not less than that, right? So stop loss at 6606 plus 20 be 6626. Take profit at 6576. So 20 to make 30, 1 to make 1.5. Again, you can see on H1, 50 is a strong resistance. Is it strong on H4? Let's look at H4. Okay, so on H4, you can see that's the entry price, that's a stop loss, and that's the profit target. Now, on H4, you can see it's a downtrend as well. Now, some of you may say, but it's not perfectly aligned because the 6 below the 18, but the 50 is not below the 200. Okay, now for H1 bounce, I'm a bit less strict, like what I said. As long as it's more or less a downtrending pattern, as long as the price is below all the moving averages, I'm okay. I'll take it. So I took that one. Yeah. Now, and what made me confident was that my stop loss, which is at 6626 on the H4 time frame, notice something. My stop loss is above all the moving averages. And remember that moving averages act as resistance. So the price is unlikely to break the resistance, and my stop loss is safely above it. So that gave me confidence that I can take this even though it's not perfectly aligned. All right. So my entry is there, stop loss is there, profit target is there. And let's see what happened at the end of the day. Perfect trade, right? So the price went up to the 50, penetrated a bit, and then boom, hit the profit target in 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 hours to hit the profit target, right? So essentially that's how I trade the bounce on the H1 time frame to double check on the H4 alignment. All right, so that concludes lesson 2, the EMA bounce strategy that works on both M15 and H1 and even higher. Thank you for listening, and I'll see you in the next lesson.